Hello guys, I hope you are doing well. Financial criminals are increasingly drawn to cryptocurrency to carry out their money laundering activities. Whether a crypto firm exchanges cryptocurrency for cryptocurrency, cryptocurrency for fiat currency such as the US dollar, or some other combination, entrepreneurs in the field must be on the lookout for indicators of illegal activity. When monitoring transactions, cryptocurrency businesses must look for red flags that may indicate suspicious or potentially criminal attitudes. Red flags are typically triggered as a result of customer behavior. So today, let's explore 5 red flags you should be aware of. Before moving ahead, welcome to CryptoNow. In this video, we will discuss the 5 red flags involved in cryptocurrency. So please take a brief moment, go down and touch the like button, and if you have not subscribed to our channel yet, go to subscribe to stay connected. All cryptocurrency companies should have a list of red flags against which they check transactions. We'll go through some of the most common red flags in this video. If you run a crypto business, this will help you. But before we go any further, it is important to understand that this video is for educational purposes. It is created to help you understand the topic of crypto red flags. Why must we stress this point? Because each institution's red flags are unique, they are defined by your institution's risk profile, business model, customer archetypes, geographic locations, and other factors. Depending on the size and scope of your operation, you might have dozens to hundreds of different red flags. As a result, consulting with an anti-money laundering AML expert is the only way to ensure that your red flags are appropriate for your company model and in line with regulatory requirements. When the team at BitAML conducts annual audits of crypto money transmitters, incomplete or institutionally irrelevant red flags are not an uncommon finding. We want to emphasize that red flags are not one size fits all, and you won't be able to Google your way to a useful collection of red flags. So, let's move on to the common crypto red flags. With that said, there are at least 5 common red flags that apply to most crypto businesses. Includes velocity, volume, insufficient or suspicious information, reporting and record keeping, and suspicious or unusual behavior. Okay, let's take a closer look at each of the 5 transactional red flags that cryptocurrency businesses should never ignore. Red flag number 1 is velocity. Velocity usually refers to a high rate of transactions executed in a short period of time. Therefore, a red flag should be raised when a customer makes multiple transactions in 24 hours because it could indicate suspicious behavior and might require further investigation. For example, say you are a crypto ATM operator. You notice that a customer tries to initiate 4 separate transactions on the same day. Each of those is under a particular threshold as determined by your AML program and your BSA compliance officer. Therefore, a red flag should be raised. This activity could indicate that the customer is structuring transactions to avoid a suspicious activity report (SAR) that you would file for a single large transaction. If this is a new customer or a regular customer who has never attempted to initiate a transaction like this before, then the symbolic red flag should be raised. Now, red flag number 2 is volume. Volume typically refers to multiple transactions that are many separate transactions spread out more than 15 days. A red flag should be triggered when this happens because it could mean the customer is structuring over a longer period of time. How does a volume scenario look? Assume you're a cryptocurrency exchange and you see a client transferring big amounts over the duration of a week or more, which add up to much more than the reporting threshold. This is an uncommon behavior that may need more investigation. Red flag number 3 is insufficient or suspicious information. A red flag should be triggered if a customer can't or won't provide identification information, cannot pass a Know Your Customer (KYC) interview. He is definitely trying to lie. In other words, if a customer gives insufficient or suspicious information required to authenticate their identification, you may need to do more investigating. Let's say you are a crypto lender and have an individual customer who cannot provide proof of residency or a business client that cannot provide information about beneficial owners. A red flag should be raised in both instances because you can't collect the identification information. You need to make sure the transactions are not suspicious. Red flag number 4 is reporting and record keeping. Suppose a customer tries to avoid answering particular questions regarding reports that you must submit or looks uncomfortable or apprehensive about the institution's need to file certain reports about transactions or about its AML standards in general. In that scenario, a red flag may be necessary. In addition, for your crypto business to be AML compliant, you must keep records and report on them. Still, criminals continue to refuse to provide the information required to submit reports in order to keep their operations hidden. For example, if you operate a cryptocurrency exchange and a customer initiates a big transaction that exceeds your predetermined threshold, you must file a currency transaction report, CTR. When you contact the consumer to gather information for the report, the customer is angry and tries to avoid answering your questions. However, you could have a problem that requires further attention. Unusual or suspicious behavior is the final red flag number 5. Suspicious or unusual behavior is defined as any behavior that deviates from a customer's known pattern. Suppose a consumer suddenly starts using several accounts, changes their mind, tries to back out of a transaction during the KYC interview, or engages in any other unusual behavior. In that scenario, it might be a warning sign. For example, if you run a crypto ATM and a customer who normally makes a few minor transactions per month suddenly makes many bigger transactions per day, that spike in transactional activity may be viewed as unusual. Wait! Please click the subscribe button to get an alarm for more updates. And do you have any questions so far? Tell us in the comments below. We will respond to you as soon as possible. Now we are going to discuss the simple tricks to identify crypto flags for your better understanding. So, those are the 5 red signs you should be aware of. Unfortunately, with a rise in the popularity of digital currencies, scams and unreliable projects have also increased. Amateur investors are frequently caught in these snares. So the question is, how can we identify these red flags? Decor, a blockchain analyst and research business, has some suggestions. It advises investing in a coin only after a careful analysis of the facts. If you see risk in a project, you should avoid it. Leaving things to trial and error isn't going to help much in the long term. To make the best decisions, fundamental analysis is necessary. To identify red flags, every element of a project must be considered, from the global economy and crypto market trends to the project's staff. Decor has highlighted a few resources for success. However, they also added that predictions in cryptocurrency seldom work and asked investors to, therefore, look for red flags. The company even highlighted 3 main statistics. Number 1, only 16% of traders achieve profits. Number 2, the average loss of a trader is 48.5%. Number 3, more trades than not are completed at a profit, but losses are often big enough to offset this. There are some areas to evaluate and their respective red flags. The pointers include tokenomics. Tokenomics is concerned with the creation, administration, and distribution of coins. Be aware of projects that issue a large number of tokens with a very low value per coin. This might be red signs for meme coins. After a number of individuals invest in them, the project team begins to burn tokens, increasing their volatility and value. Also be aware of teams attempting to modify the behavior of a coin. Scam projects include OneCoin and BitConnect, are 2 fraudulent enterprises that have wreaked havoc on the crypto industry. To avoid scams, projects always analyze the real value and use case of the coins. It is likely to fail if the project is not used for any real purpose other than making money through profits. That's what happened with OneCoin and BitConnect. For example, Chainlink's Oracle technology takes external data and feeds it into blockchains. That's more than just making money and has several applications, from economics to healthcare, telecommunications, governance, and more. You should not choose any and every crypto project that has a use in the real world. Instead, weigh and see if the project is useful in the world of digital assets. If not, the project may be a way to attract capital. Check if the coin is achieving a desirable degree of decentralization. Learn to check the code of a project to ensure that it is solid, or familiarize yourself with auditors to know if a third party has checked them. Remember, guys, that suspicious activity does not always mean that something illegal is taking place. you must select a BSA compliance officer for your company who may decide what actions and red flags need inquiry and when particular reports such as SARS should be filed. Again, the 5 types of red flags presented in this video are described solely for instructional purposes. Because each institution's red flags are unique, this video is not a place for actual compliance guidance from crypto compliance experts. Consultation with an AML specialist is the only way to ensure that the red flags raised for your company are suitable and acceptable. So guys, wrapping up today's video, do you have any questions regarding crypto flags? Do not hesitate to add your thoughts in the comment section. If you have not subscribed to our channel yet, then subscribe and hit the notification button to get alarmed with our latest content. If you want to make money and enjoy financial freedom, then CryptoNow is for you. Thanks for your time. Be happy. Bye.